I want to break down two different trades that I took today on the S&P 500, November 15th. Was it lucky? Did I have a plan? What were my entries? What were my exits? I want to get into all of that in this video. The first trade was an $1,800 loss. And the second trade, which may have been a lucky trade, was an $11,000 win. Before we get into the setups, I'm going to post a link for my Instagram in the description below at Ameritrade. I definitely recommend everybody to follow me on here. I post daily trading recaps along with very good trading tips and tricks that I guarantee you're not going to find anywhere else. Link in the description below. You're missing out if you're not following it. So the first thing I want to say is the S&P 500 around 1:30, 1:15 Eastern time, we had a very large aggressive market sell-off, heavy volume to the downside off of news about Russia and Poland. Now this aided a short setup to the downside. We were watching a break below 4,010, which is this top green line, and the news came out pretty much directly prior to us breaking down below this level. So was it lucky that news helped support this analysis? Yes, but I'm going to show you my plan and why it's vital to manage your risk, stick to your plan, and have conviction in your trading setups. It's so key to trust yourself and trust your analysis. The reason why we have an edge and the reason why we come up with a plan is because we trust our setups and we stick to those setups. And when we deviate away from them, we tend to lose, and nothing more frustrating than taking a loss when we deviate away from our plan and our edge. With this in mind, to gain context, let's go over the pre-market plan. I post these every single day in the Discord in the pre-market plan tab, and the S&P 500 is my favorite instrument to trade. It's what I make the most amount of money on. I said I could not be too bullish inside of 4,000 to 4,024 supply, which is this pink little box that we're going to see on my charts over here. Scenario number one is if we can form demand on a higher time frame above this pink box, then I will look to play the market long. Or if we could break above this 4024 level, I'm going to look for ways to play long, targeting 4096, which is this pink line up here. And then we had a bearish scenario that if we rejected this level, the real downside move will come once we come below 3955. What's vital for this trade and this analysis, and I think this is important for everybody watching this video and every single trade you take and how you approach the market. I play levels. I don't predict what's going to happen next. I don't say I'm going to be bullish. I don't say I'm going to be bearish. I don't care where the market goes. I'm an intraday trader. It could go up, it could go down. That's irrelevant for me. I just trade my plan and I stick with it with the levels that I'm watching. I react to what the market provides me. I go with the flows of the market. We have our levels of interest and we react to what the market does at them. So now we had news prior to the market opening, PPI data, and we got above this supply zone, and now this becomes invalid for me. I'm not watching it, but I'm going to leave it on my charts because it plays an important role for the setup that I took. Now we're above this level. We did not have any resistance or supply until 4096. Now what's important here is now we're above this level. I look for ways that I could play the market long. The problem with playing the S&P 500 long after that news and after a 50-point rally was VIX had demand at 2338. Now, I don't use VIX very much in my analysis. It's only when it's at key inflection points and key areas. And we did have demand at 2338. And what was very interesting for me was despite the rally on ES and NQ, VIX did not sell off as much as we would like to see on that news. Usually we see a very large sell-off if the S&P does rally, especially on news. For example, right here on the left is the S&P 500 last Thursday when we had CPI data. Last Thursday, the market rallied on the S&P 500 about 150 points before the market even opened up at 9:30 a.m. Eastern. During this time, VIX had a very large sell-off, aggressive, violent, and in a very large price swing. So as the S&P last Thursday rallied very aggressively, VIX sold off very aggressively. And then today, on November 15th, we had a 50-point rally before the market opened on the S&P 500, yet VIX was not selling off as violent and as aggressively. In fact, it was bouncing off of this 2338 demand zone, which was in the pre-market plan that I said if we can remain a bid above this level, I expect the market to have a difficult time rallying, specifically talking about ES and NQ. So even though the pre-market plan stated that if we are above 4024, I'm going to be looking for ways to play the market long. What's vital is we must change and react to new information the market presents. I said in intraday commentary, this is where I update my thoughts in real time, no hindsight of what I'm watching and why. I said the VIX chart is making it difficult for me to believe an upside move will be a higher quality one. I think the market is going to try to trap as many longs as possible up here before we see a move lower into yesterday's range. So essentially this move up would have trapped a bunch of longs, especially when the market opened up. Everybody was expecting the bulls to keep trying higher, and they were getting in long, expecting a further rally to the upside. That VIX analysis enabled me to be very cautious for the long side, and this update was 6 minutes into the market being open. And again, here are the two charts. This was VIX last Thursday, and this was VIX today. We cannot really compare them so much because last Thursday's rally was 150 points, and today was only 50 points. But still, the VIX was very, very strong and bouncing off of demand while the S&P was rallying, and this was kind of like a red flag for me to be cautious for the long side. This does not mean to automatically get short. This just means that longs are on caution for me. So for that reason, I said I'm not interested in getting long at these levels. It's important to understand the market is like an ocean. This is relatable to no matter what market you trade in. And if you want to have success, you must agree and accept this analogy. The market is like an ocean. Tides change, temperatures change, and waves become more violent and calm. As a trader, it's vital to go with the flows of the market when they tell us to. If you try to fight the waves or go against the current or go against the tide, you are not going to be able to survive, and it's the same thing in the market. We must go with the flows of the market. 1 minute we could think one way, 1 minute we could be bullish, the next minute we could be bearish. It's constantly changing, it's constantly presenting new information for us, and we must react to the changes in waves in order to consistently see success in the market. Bend, be flexible, and react. So now the market opens up, and I had an area of interest at 4,010 to about 3,994. That was the level we were watching when we opened. That was because this was the level prior to the rally up, and this was also a level at 3,994 prior to the 730 little mini rally up around this area right here. So the two setups I took today were speculative ones, meaning I was speculating that sellers were going to step in, and I was using those levels to the downside at 4,010 and 3,994 as targets, speculating that sellers were going to step in due to this little divergence in the S&P and in VIX. Now my job is to spot sellers intraday. My first setup came at 954. It was an $1,800 loss. I took ES, the futures contracts, short, and when the market looked like this at 954 is when I opened up my first short position. Now again, the reason for this was the market started selling off. I was speculating that we were going to break the low, target 4010. This is also what it looked like on bookmap. We had a seller around 4,025 that the market relief bounced into this 4,025 level. It acted as resistance. And then I got short when the market started heading lower, just like this. And then about 2 minutes later, we break this high right here, and I stop out of this position to protect myself. It just did not work out in my favor. And now this is where the $11,000 profit trade came from. Did we get help from the news? Obviously, it helped us when that support level broke, but the support level broke because of the news. So I'm kind of questioning is if we didn't get that news, what if the support broke? So I really was not interested in taking the market short on this rally. However, I saw this little trend line break, a little supply zone on a smaller time frame chart, and then I saw a double top or lower high, whatever you want to call it here, reject. And then at this little 1006 candle right here on bookmap, we saw aggressive selling step in over here. Nothing out of the ordinary or crazy, but it was just aggressive selling near the high. And I was comfortable with this information to take the market short. I was risking 8 points, which was high a day, to make a potential 20 points or 35 points if we got out at our target down below. So the risk to reward was 3.5, 4 to 1, depending on your target. I'm totally cool with taking the setup, but it was a speculative play. This is not a setup I would normally take because this really wasn't a major supply zone, and I can't take the market short just because I know a bunch of longs are buying a breakout above a trend line. So yeah, I had confirmations, but the confirmations weren't the best confirmations that I know have a high quality setup of working. The risk was tight, so I was comfortable taking a trade with small size. Then the market begins to sell off aggressively. This position is starting to work out in my favor right away. Then the market comes back up. This trade is really not working out right now. I'm losing about 3 points on this setup. My stop loss never triggers, so I still have a reason to be in this trade. I'm extremely patient and I follow my plan. If my stop loss doesn't trigger or my target doesn't hit, I'm still in the trade. Then we get a dip down, and guess where the dip down is? Right into 4,010, which if you know from earlier, that was the level of buyers. So here's the consolidation. I was short at that oval. My target was 4,010, 4,000 or 3,994. It really was a flexible one depending on what the market did at those levels. If selling pressure was heavy, then I would have held on to a winner. But we get that dip down into 4,010. And at this moment, the chart looked weak. All thoughts in the market are irrelevant. Thoughts are not going to move the market. You have to react to what the market presents you. At this moment, I was thinking that we were going to see increasing selling. Volume was increasing. We were putting in lower lows, putting in lower highs. And I was confident that even though 4,010 traded, that I would have seen at least 4,000 or 3,994 to the downside. So I was expecting something to happen, and I was thinking we were going to see more sell off to the downside. Our emotions play tricks on us. Our emotions want us to make more money, and our emotions don't want us to lose money. So our emotions are going to do whatever it takes to protect us from this pain. With this being said, we bounced off of that 4,010 level perfect. This could have been an opportunity to get long, maybe scalp it long. However, I was in short, so this did not even cross my mind. And then at 11:54, I posted an update. I said this worked out very well. However, I'm still in this trade short. I did not take profits at my level. We bounced there perfectly. I was expecting more downside. And at this point, to be honest with you, I could not read the action. I said, I can't read it. It's indecisive to either side, and I have no control over anything but my plan. I said, here's a 1 minute chart. I will not be longing a breakout of this trend line. I just want to show how balanced we are, and we're destroying premiums. So if you trade options on a day like today, before the move down, your premiums probably got crushed. A day like today would have been favorable for options trading. So here's the chop. Yeah, we're putting in lower lows, putting in lower highs, but I couldn't read this action. It could have went either way in the market. In fact, here we had this another downtrend line, and I saw a lot of chat rooms, a lot of other people on other platforms, not going to mention anything, were alerting to get long above 4,030. And they're alerting to all their followers in an area that, in my opinion, is not a high quality setup to get long, especially off the sole fact that they were longing just because we broke above a trend line. Trend lines don't move the market. I just use them for context, especially in scenarios like this. We've rejected this level multiple times throughout the day. In fact, I want to say maybe about 8 or 9 times. So now I post another update. Again, I have no shame in saying I could not read the action. Although I am in short, I kind of regretted getting in short due to me sitting in front of the screens all day long. And if I was not in this position, I most likely would not have opened up a setup due to the context and due to the conditions. So now 2 things we were watching. I was kind of getting a little worried to the downside just because we were holding pretty much all afternoon above this 4,024, 4,000 level, which if you remember from the pre-market plan was a bullish scenario. So this could have speculated that demand was forming if we got a rally up. However, I said I'm still in short. I have been in short since 4,030. My analysis hasn't been proven wrong yet. I was very cautious that if new demand formed, it would have proved my analysis to be incorrect. I said, however, this is not going to be validated if we get a strong break below 4,010 and then below 4,000. Now at this point, we move into 4,010 again for a second and third time. And at this point, since the highs were getting lower and lower after every bounce, led me to believe that buyers were not getting rewarded, although they were showing effort, and that is just not going to help the market move higher. So with this analysis, again, it might have been the wrong decision if we did not get the news that came out. And I might be making a video right now regretting not selling at 4,010, but I held on to this position. At this point now, I'm lowering my stop loss. And then I said, here's another bounce of 4,010. We're only going to break this level once VIX breaks 24. Here's the VIX 24 resistance. You could tell multiple different times. I want to say about 10, 11 different 1 minute candles rejected this 24 level. And then I said, once we could get a break of this 24, we're going to see the market absolutely sell off, break below 4,010. VIX broke above 24, aiding a sell-off in the S&P. Then we got that large sell-off below 4,010. I'm still asking myself, if the news didn't come out, was this level going to break? But it was helped with news. Did I get lucky on this setup that news came out at the same time support broke? I'm not sure, but we broke below 4,010. My target was 4,039.94, depending on what the market did at those levels. And if you were watching the tape, as we broke out of this level, it was just very, very heavy and very, very aggressive if you were watching the market at that moment. And at this point, I'm not going to sell once 3,994 triggers or even 4,000. I'm going to wait for any sign of covering, any sign of life. And as soon as I saw this green little buying volume right here, I got out my full position around 3,985. And this was the $11,000 winner on 5 E-mini S&P 500 contracts. For the point I'm trying to make with this video is trust your analysis, have conviction in your system, trust your edge, and trust yourself. Create a plan, view the market as an ocean, the waves, the tides changing, the temperatures changing, and go with the flows. If you do that and leave your emotions out of it, you will become a better trader. If you gained any value from this video, I would appreciate a thumbs up on this video, subscribe to the channel, comment if you have any questions, and also check out the links in the description below. I offer a very in-depth and educational course. It also comes with access to the Discord at no extra charge. After Black Friday ends, the courses will be going back to original price. The prices you see on the website are still the discounted prices. Peace out.